I'm going to go over the SPY 1000 tick chart. Today's action just really illustrated some of the best concepts. And let's start. Okay, so we all know that there was a gap. When the gap occurred, there was a one bar pullback. And what does that one bar pullback mean? If after gap or after strength there's only a one bar pullback and it continues higher like this, it means that this is an area of support. Why? What makes this an area of support? The fact that there was a lack of supply. There's a lack of supply. How do you know there's a lack of supply? You know there's a lack of supply because it's only one bar. One bar will never have more pressure. It has no follow through, and therefore there was a lack of supply. So after this lack of supply, the market moved up, and it went up on these four bars here. This is, in my world, this is really important because there's a couple of things to note here. First of all, you had a gap, you had a pullback, and it did this. At first, I thought this was some type of shortening of the thrust, but you have to be really careful because I'll go over it later. Do you want some type of characteristic, and you have to take a look at the background. Bear signals just don't work in bull trends. They don't. If you're going to short an up thrust, because what they just don't work. Bear signals don't work in bull trends and vice versa. So that's what happened. And eventually you had a buying climax of these four bars. Now, do you know this is going to be a buying climax? No. Could it have gone higher, pulled back and gone higher? Yeah. You really don't know. You just don't know. You only know in hindsight after it's broken. After the low of the wave is broken. You only know that this was some type of climax after the rally low is broken. Okay? Because, there are other ways to detect, but we're not going to go into that now. The other thing you note was when it went up, it did retest. And it retested on only one bar. What happened? One bar pullback and another one bar. One bar doji, another one bar. That's telling you that in this area at this particular time, there's no demand pressure. So you had the buyers come in, get trapped, and there's no follow through, meaning no incremental buyers. And that's what this test represents. So after that, do you know that that's going to initiate a partial, pullback? No, you don't. You don't know, but it does make sense. You see it at other places as well. Anyway, so now it pulls back, and you're going to note that when it pulls back, it breaks this pivot with a thrust. That's important. Okay? Breakouts, whether they're small or big, always valid ones, or at least the high probability ones, almost always have a thrust. There's a thrust, then you have a one bar demand followed by 2 bars down, another one bar demand followed by 3 bars down. So I know I have some writing on this, I'll explain this later. But basically, in my world, this is kind of like your bear flag pattern where you have a bear flag and then continuation. So just think of it like that. I call it SDS, supply, lack of demand, followed by supply. Therefore, the S, D, lack of demand, and followed by supply. Okay, so, and I put legs here because it has 2 legs of a bridge. It's an interesting story that Bob Evans, I think his name was Evans, he has an interesting story that he did on bridges and how you need 2 points of support or 2 points of resistance for price to hold. Anyway, the point that I'm trying to make here is A, the support area. B, you did have a lack of demand in this area followed by thrusts down, but they went right into support and buyers came in with this 4-bar rally. After that, you had 1-bar retest, didn't do shit, and then you had this counter trend back to that same level of support to see if it's going to hold. Now once it comes here, you notice this 1 green bar and then 3. You really don't know what the hell this is. I don't know what it is, but I do know that in this minor counter trend, or you want to call it a pullback, that's fine. Its high bar, which is right here, served as resistance. These areas are critical, the high bar and the low bar, because trend has to break them in order to change. So once you have this all the way down to support, you understand that this area is a difficult area to break, the high bar, and so is this area, the support area, the low bar. But probability favors the existing longer term trend, which is bullish. So in this battle of support and resistance, what happens? You come back down to the support, and then you have a violent thrust from that same area, meaning people want to take it up. Whoever strong hands are, they want to take it higher. And this is a critical wave. Why is it critical wave? Because after this 5 bars up, you have an immediate attempt to go higher, and then an immediate attempt to higher. I just call it TH, meaning trading higher. TH, meaning this strong wave up or down, followed by an attempt to go higher. So you see this strong up, and then another up, and then I use another term called reaching, which means it goes up, then has no supply on this 1-bar pullback, and it immediately tries to go up. When it immediately tries to go up, that means it's very enthusiastic buyers. It goes up, they don't give a shit, they want more. Up again, pull back, up again. So what that means is this area now, the low area, around the low area there's gonna be support established. So because us little guys see this action and we're like, holy shit, I want to get in. Where's the best place to get in? The place where there's the least amount of risk. Where is the least amount of risk? Near the low bar, around this area. So it's either going to be this one or the prior one. It turned out to be the prior bar right here, and you had a test. You might see this as selling, and it definitely is, but selling in the context of strength. It is a pullback. It is a pullback, I don't know, like a 68 or whatever percent retracement to test, and buyers jumped on this. How do you know whether this selling is going to break trend or not, or probabilistically? You know that because after a rally there comes a reaction. It is built into the market. After a rally comes a reaction. All this is doing is creating a rally. Now you know there's going to be a reaction, right? A normal retracement is 50%, sometimes a little bit more, sometimes a little bit less. So in this case it retraced. So this is expected. Alright? So now it pulls back to an area where you want to get in. Okay, trend is up. This pattern, or whatever you want to call it, I call it TH. It means strong up and then follow through immediately. Immediate follow through. It is evidence of a high level of enthusiasm. So you have the buyers, and then you have us passive buyers who want this area. So the passive buyers who are buying on retests and limit orders, they're all over here. And you notice there's a 3-bar move. That 3-bar volume, 3-bar wave is evidence of demand. Now, when there is demand, there must also be a lack of supply. You have demand in the background. You have demand again. The only way this thing is going up is if there's a lack of supply. And this is the money maker, that you want. The SOT. This is the lack of supply that you are looking for. This is the market attempting to go lower and not finding any liquidity. No liquidity. But it is meaningful because of two things. A, an existing uptrend in the background. B, the trade higher, trade higher pattern or whatever, trade higher. And C, there's a third thing actually, is this demand area in the background. This demand in the background. Is it telling me? You see, after the trade higher, I'm already thinking about where to get in. My entry would probably be around here somewhere, near the low bar. It goes close to it, demand comes in, pulls back, and guess what? This is a SOT, not in the traditional sense, but I call it an SOT, a different type of, they're different. It is a shortening of the thrust, but this is a very specific type. Okay, this is a lot of tops and bottoms, by the way, form this shortening of the thrust. So you have a shortening of the thrust, and look, as there is no pressure, meaning there's only one bar down, right? What has to happen is you have to have strength in demand right after. After any SOT, or at least in this specific type, you want to see weakness followed by strength. You have weakness, which is in the form of one red bar, and you have strength, which is coming from that same area, that same level. From within weakness, you have a thrust. Again, from within weakness, identified by one red bar, you have a green bar thrust. That green bar thrust is a kiss of death for the bears. Okay? And it has a follow through. The best place to get in is on the close of the green bar thrust, after the follow through. Okay? So again, the reason the trade higher is a pure demand, reaching up here, pure demand, pull back, additional demand attempt, pull back in an ABC correction where liquidity or supply dries up, followed by a thrust and follow through. The follow through tells you the market is going higher, and that's what it does. It goes higher. The best place to enter was the SOT close. After that, it goes up, pulls back, no supply. You have a minor spring here. By the way, what's extremely important is you understand what this bar is. This bar is the most important bar in this entire chart. This bar is the markup bar. The markup bar is the initial breakout bar of the demand area. This is the demand area, right? There's 3 bars. This high, this thrusting breakout. It is the the delimiter between the accumulation phase and the markup phase. It is the kiss of death for the bears as well, and there's a follow through bar after it. This means that prior to this bar, it was all accumulation, and it was. These 3 bars were accumulation, or in cases actually reaccumulation. The lack of supply, boom, the markup occurs. Once that markup occurs, bye, you are no longer in any accumulation phase. All of this is markup phase. Mark up phase. Bye-bye accumulation. Hello markup. So here you will enter the markup phase from here. In markup you have markup, and in this case you had a bull flag. It consolidated. The key thing to remember is that you had one fucking bar right over here that signaled you that there was a lack of supply. When that bar appeared, it signaled traders that ain't no supply. Then came the thrust. Lack of supply plus a thrust, breakout. Now this is not a markup bar, but it is a continuation. Okay, I guess you could call it a continuation breakout or something like that. Alright, so you're in the markup phase here. You're in the continuation of markup here, out of this bull flag, and then you pull back, and again, what do you see? No supply. Pull back, no supply, and instead you have continuation. But notice how, this wave was very large. Now at that point you had the buying climax. Now, do you know it's a buying climax? No. Do you know when it closes buying climax? You would have no idea until this red wave, which is bigger than the buying climax. This is the buying climax, and this is the selling wave. So the selling wave here told you that these guys who caused the climax, either they got out or they sold, or there's basically a transfer of risk. It means sellers have overtaken the buyers. Sellers overtook the buyers. This is the biggest wave, and this is also, by the way, known as a change of behavior, or you could call it a sign of weakness, whatever, doesn't matter. And then what's critical is that buyers, when they attempted, they failed, and instead you had more selling. And this selling is a very specific pattern, which is really important. It's called SDS. I call it SDS, which means supplied, lack of demand, supply. Just like the other one here, I called something right here SDS legs, because it had two demand, right? This one bar and then one bar. In this case, there's only one bar, so there's no legs. I don't say SDS legs. There's no fucking legs. There's only one bar. So you have red, one green bar followed by a lot of red. Alright, that that basically can initiate a downtrend. So once that happens, they're in total control, and you look at the dump. Look at this dump. Red, red, red. Right? Now they've sold a significant amount. Whoever did, or were behind this campaign or whatever, they dumped. Out. Get me out. Get me out. Sell, 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 sell. This right here, the way this looks, is sell, 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 sell. Alright, because the market has gone up way too much, and it's now time to get out. So they get out, and what you want to note is it's very important for the market to test two areas. Alright, the high bar and the low bar, meaning the trend extremes. What is the high bar? The high bar is right here. It's the highest bar in the trend. Does it get tagged? It does. It got tagged. Okay, it gets tagged. Very important. Very important that after, when that selling pressure happens, it's very, very difficult to take out the high after that type of selling pressure. So, they'll attempt, and you have a lot of guys that just want to sell the high bar because it's easy money. You have one bar of risk. And that's why a lot of traders who focus on risk will sell the high bar. Anyway, so sell the high bar. Next area is ICE. ICE is actually this bar. This bar is the low before the high. So what happens is you have this retest, and it went exactly to the T where it's supposed to go to, which is the ICE area. And guess what happens? Remember this pattern? S for supply, D for lack of demand, one bar, and then existing supply. So at this time, again, you had supply, lack of demand, and supply, giving these guys all sorts of problems. And now you have a 4-bar up wave. Can it do any damage? We don't know. Find out Monday. So this is a trend review on the action in the SPY. There are some really key concepts that need to be understood. The first is support area established by a lack of demand, evidenced by 1 bar, followed by the climax, followed by a retest on no demand. Not sure if this is an upthrust, but lack of demand at the highs, going all the way back to the same support area from which you have a massive and violent buying wave. That buying wave trades higher, TH, immediately. Okay? No consolidations, I mean immediately trade higher. 1 bar down, and immediately another green bar up. That shows enthusiasm for the buyers. After that, what happens? You basically just have a normal reaction. You have a reaction, and then you have demand come in, and this is where you learned SOT. Then the follow through in the markup bar, separating accumulation area. This is all accumulation here from markup. And the question really is, where was the best place to buy or sell in my world? The best place was here, the low bar. The best place was here. After the SOT, you had this, I forget what it's called. Yeah, the thrust after the SOT. The third best place to bar was after the markup bar. You actually had a minor spring and a follow through right there. And the fourth best place to buy was after this bull flag, you had this breakout. And prior to that breakout, the high of the bar prior to the breakout got tagged. That's also one of the best places to buy. Because when you really think about it, what are 2 bars where the second bar makes a higher high? And at a very, very minute level, it's a trading range breakout. Every bar that goes higher is a trading range breakout. The trading range is defined by the prior bar, high and low. And the next bar, if it goes higher, closes higher, it took out the prior bar high. So at a very minute level, every time, you're actually getting a breakout. But that's not that important. What you need to know is that the prior bar high, where it got tagged, and then finally the concept of climax, and then initial selling. And the selling is so fucking obvious. You see it over here. 1, 2, 3, 4, 5, 6. Puke, 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 puke. Or in other words, take profit, take profit, take profit, take profit, take profit, take profit. Goes up, take more profit, more profit, more profit. Take more profit, more profit, more profit, more profit. Okay, so this is it. Alright, I'm done.